Hello and welcome to ActivTrades Weekly Outlook. After a slower start to the week, there's plenty to keep investors occupied after Monday. Some of the big names in the bricks and mortar and online retail world are reporting their earnings this coming week too. Home Depot and Walmart are due from the US, and Tencent and Alibaba are also due this week, among many others. Investors will be looking for how interest rates rises have been impacting consumers' buying power and if many are transitioning their normal spending to more discount retailers. Let's dive in. The Australian Westpac-Melbourne Institute Consumer Sentiment Index increased 2.9% from 77.7 in September to 82 in October, marking the highest level in 6 months. However, it is still quite negative and is forecast to worsen given the RBA's recent rate rise. The newest data for November is due on Monday at 11:30 p.m. GMT. The NAB Business Confidence Index for Australia remained at 1 in September, unchanged for the third consecutive month, but remaining considerably below the average. The October results due on Tuesday at 12:30 a.m. GMT are expected to show a dip to -1. A range of employment data from the UK is due to be released on Tuesday morning. The number of people employed in the country fell by 207,000 in June, while another expected drop of 185,000 is expected for August. Meanwhile, in the 3 months to August, UK average weekly wages including bonuses rose 8.1%, the lowest in 3 months, although still historically high. The unemployment rate is also forecast to increase to 4.4% for September, up from 4.3%. The ZEW indicator of economic sentiment for Germany is due on Tuesday at 10 a.m. GMT. The figure for October increased by 10.3 points from the previous month to reach -1.1, greatly above market predictions of -9.3. This proves to indicate that Europe's biggest economy has likely recovered from its recent dip, and forecasts for November are expected to come in at around 1. US inflation data is due to be reported on Tuesday as well from 1:30 p.m. GMT. Despite market predictions that it would reduce slightly to 3.6%, the headline annualized inflation rate held constant at 3.7% in September. This was mostly due to a weaker reduction in energy prices, offsetting slower inflationary pressures in other categories. September saw a slight decrease in the annual core inflation rate from 4.3% to 4.1%, the lowest level since September 2021. Only minor movement is expected from both rates for October, with the core rate forecast to fall to 4% and the headline rate to increase to 3.8%. During the second quarter of 2023, the Japanese economy increased by 4.8% on an annualized basis, contrasted with preliminary figures showing a 6% growth and a downwardly corrected 3.2% gain in the previous period. It was, however, the quickest rate of growth since Q2 of 2022. The preliminary forecast for Q3 is not as strong at -0.6%, with the result being published on Tuesday at 11:50 p.m. GMT. Amidst the recent rush of governmental efforts supporting the economic comeback, China's industrial production remained stable at 4.5% in September, retaining its highest level since April and somewhat beating market predictions of 4.3%. The October report due on Wednesday at 2 a.m. GMT is expected to show further growth to 4.8%. Retail sales data is also due from China at 2 a.m. GMT on Wednesday as well. The pace of growth accelerated to 5.5% in September from 4.6% in August, above market expectations of 4.9% growth. Since May, this was the most significant rise in trading activity. Further expansion is expected up to around 6.7% for October. UK inflation figures are due to be released at 7 a.m. GMT on Wednesday. In September, the headline inflation rate held steady at 6.7%, maintaining August's 18-month low and confounding market predictions of a decline to 6.6%. This month's report, however, is expected to show a decline to around 4.9%. Meanwhile, the core rate is forecast to fall from 6.1% to 5.6%. After increasing by 0.7% in August, the producer price index in the US increased by 0.5% from the previous month in September, the lowest monthly increase in 3 months, but still higher than market expectations of 0.3%. Forecasts month over month for October are for a slight rise to 0.1% when the data is released at 1:30 p.m. GMT on Wednesday. Monthly retail sales are also due from the US at 1:30 p.m. GMT. Sales climbed 0.7% in September after an upwardly revised 0.8% gain in August. Despite continuing price increases and higher interest rates, consumer spending seems to be holding steady, and consensus estimates expect a static 0% growth for October. Japan's trade balance surpassed market expectations of 425 billion yen deficit to unexpectedly turn to a surplus of 62.44 billion yen in September from a deficit of 2,099 billion yen in the same period the previous year. When the new results are published at 11:50 p.m. GMT on Wednesday, expectations are for a return to a deficit of around 89 billion. Major earnings releases to include Cisco Systems Incorporated and Alstom SA. Australian employment data is due from 12:30 a.m. GMT on Thursday. In September, Australia had a 6,700 rise in the number of people employed, while just shy of 25,000 new jobs are expected to be created for October. The unemployment rate is expected to remain the same at 3.6% this month. Despite market expectations of a decrease to -6.4, the Philadelphia Fed Manufacturing Index for the US rose to -9 in October from -13.5 in September. A further drop to around -11 is forecast for the coming report at 1:30 p.m. GMT on Thursday. Major earnings releases to include Walmart, Alibaba, Siemens, Burberry and Valorec. UK retail sales figures are due to be released on Friday from 7 a.m. GMT. In September, sales fell 0.9% month-over-month, which was worse than the 0.2% decrease that the market had predicted, and a reversal from the 0.4% gain in August. Year-over-year, sales also fell 1% in September. The October inflation rate for the euro area is expected to be confirmed at 10 a.m. GMT on Friday. Expectations are for a decrease to 2.9% year-on-year, achieving its lowest level since July 2021 and dropping slightly below the market consensus of 3.1%. Meanwhile, the core rate, which excludes the effects of changes in the cost of food and energy, apparently dropped to 4.2% in October, its lowest level since July 2022. According to updated statistics, the number of building permits issued in the US fell by 4.5% from August's 10-month high of 1.541 million. To a seasonally adjusted annual rate of 1.471 million in September. Rising mortgage rates have negatively impacted the demand for housing, but the market's persistent lack of suitable properties has served to offset some of the damage. When the newest results are published at 1:30 p.m. GMT on Friday, expectations are for a dip to 1.45 million permits for October. That's all for this week. If you would like to read the full outlook, please visit the analysis section on our website. Happy trading!